My name is Brandon Banazinski, and I chose Target Corporation. A little background on Target. It was founded May 1st of 1962 in Roseville, Minnesota. It currently is the second largest department store retailer in the United States, behind Walmart. Its headquarters is in Minneapolis, Minnesota. Currently, there are about 345,000 employees employed at Target. The main supplier of goods at Targets are household goods, clothing, electronics, groceries, sporting goods, personal care, and home decor products. Um, and as stated before, the main competitor of Target is Walmart. Here I have a pie chart which breaks down the sales mix for Target from 2017 and where the percentages of their sales came from. Beauty and household essentials was at 23%, food and beverage at 20, apparel and accessories at 20, home furnishing at 19, and hardlines at 18%. Hardlines would be the things that you notice when you walk right into the store. Um, the miscellaneous products is really what the hardlines are. Global operations for Target. Currently, there are over 1,800 stores in 49 states. They have 37 distribution locations throughout 22 states. Their data science and engineering office is in Pittsburgh, Pennsylvania. Their financial and retail services office is in Minneapolis, Minnesota, and Tempe, Arizona. Their innovations office is located in San Francisco, California. Their northern campus or northern office is in Brooklyn Park, Minnesota. They have one headquarters overseas, and that is in Bangalore, India. And currently, there are about 2,500 team members at that headquarters in India. Here I have listed some of the financial ratios of Target. The free cash flow is $3.5350 billion. The return on equity is 27.86. Their current ratio year to date is 0.82. Price per earnings is 15.31. Their debt to equity is 0.91. Dividends per share is 2.56. And their EPS is 5.32. Here I have listed some of the financial highlights of Target from 2017. $71,879 million in net sales. They had a 16.2% jump from 2017 in their adjusted earnings per diluted share. 2,928 million net earnings and 4,312 million earnings before taxes. The current stock conditions of Target, $87.68 is their price per share. 46.15 billion is their market cap. They are a large value stock style. Their 52-week range high was 87.28. The 52-week range low was 54.04. And their dividend yield is currently at 2.92%. This line graph shows the stock performance of the stock price at Target since January 1st of 2014 all the way to today's year to date. As you can see here, these are the dividend payouts that Target has had since the beginning of 2016. They're all cash dividend payouts, all very close in amount. They don't vary too much. Only a 6 cent raise from March of 2016 to March of 2018. Here I show our diluted earnings per share and how it has changed over the past 5 years. As you can see, a little bit of fluctuation, currently at our peak of 5.32 in 2017. So in conclusion, from this report that I have shared with you, I would invest. The stock price fluctuates, but it is on the rise. Every company has its fall, every company has its rise. But currently, Target is doing good things um, inside and outside of its business that is causing the stock price to raise exponentially more than it has over the past few years. The company invests in other organizations outside its own business, doing charities and helping other organizations that they believe in. Their morals and their values match mine. It's something that I believe in to help the people in need and to help homeless, to give back to the community. Those are all things that I share with Target. They have a huge chance to grow into the global market and increase their stock price. They haven't really reached out into the global market yet, but I have a feeling that over the next couple of years, they will start to branch out a little bit more and see a little bit more increase in their stock price. Uh, Another reason is the idea that as a shareholder, their dividends are paid out 4 times a year. It may not be much, but they are still being paid out, and they are being paid out um, for their work within the company and being a shareholder. That's something that I value as an investor. I would want that to happen. Um, and lastly, they have stable sectors that generate revenue. As shown in the sales mix, if one sector isn't really doing well, they have plenty of revenue coming from other areas of their business that will continue to give them capital and give them revenue.